Everyone tells you to dump your money into index funds, but are they really the fastest way for you to build wealth? Real estate sounds safer with cash flow, but is it worth the massive capital taxes and headaches for you right now? Inside businesses, they can make you rich, fast, but only if you know how to execute without wasting years. So here's the real question. Which one should you focus on? And how can you apply it starting today? Stick to the end, because this will change the way you build wealth forever.
Welcome to The Explainer. Today, we're diving deep into one of the biggest questions out there when it comes to your money. Should you be in stocks, real estate, or maybe even start your own business? We're going to break down all three paths to help you figure out how to build your own personal wealth blueprint. Okay, before we get into the good stuff, just a super quick heads up. Everything we talk about today is purely for educational purposes, all right? This is not financial advice, so you've absolutely got to do your own homework. All right, so let's set the stage for today's big debate. We are putting three absolute titans of wealth building head to head. You've got passive investing in the stock market. You've got owning actual physical real estate. And then there's the wild card, launching your very own business. All of them can make you rich, but man, they could not be more different. So let's see how they really stack up. First up, we've got our first contender, the passive powerhouse, index funds. This is all about tapping into the stock market's growth without having to become a full-time trader. You know, it's the classic set it and forget it strategy, and for a very good reason. So what's the big draw here? Well, it's pretty simple. Consistent returns. If you look at the long-term picture, global stocks have historically delivered somewhere in that sweet spot of 7 to 10% per year on average. And that right there is the magic of compounding, just quietly working in the background, turning small investments into a serious nest egg over time. But, and this is a big but, where you invest really matters. Just look at this. Over the last decade or so, the US market has just been on a tear, massively outpacing returns from other developed markets, like in Europe. So yeah, that long-term average is a great guide, but you have to remember that your actual returns can look very, very different depending on the region. Okay, so what are the absolute killer advantages of index funds? Well, there are two big ones. First, the effort required is ridiculously low. I mean, you can literally set up automatic payments and then just forget about it for years. And second, your money isn't locked up. It's super liquid. If you need cash for whatever reason, you can sell your shares and have the money in your account in just a few days. That's a huge plus. Of course, it's not all sunshine and rainbows. There's always a trade-off, right? The big one here is volatility. You have to be okay with watching your portfolio take some pretty wild swings up and down. That can be tough on the nerves. And then there's taxes. Oof. Depending on where you are in Europe, capital gains can get hit hard, sometimes with taxes of 30% or even more. So that nice 10,000 euro gain you made, it could easily shrink down to 7,000 after the tax man comes knocking. All right, let's shift gears and look at contender number 2, real estate. This one's a timeless classic, right? We're talking about owning actual physical property, something you can see and touch. And the name of the game here is cash flow. So the number one reason people get into real estate is for the income it kicks off every single month. And as you can see, these rental yields, which is just a fancy way of saying how much rent you get each year compared to the property's price, they can be all over the map in Europe. You might see higher yields in some Eastern European countries and a bit lower in more established markets. But either way, this is like getting a monthly paycheck from your asset. And this is where real estate has a kind of superpower. It's called leverage. Think about it. With a mortgage, you can control, say, a 300,000 euro asset with maybe only 50,000 of your own cash. You're using the bank's money to make money. And when you factor in that powerful leverage, plus the property hopefully going up in value, your total return can actually end up looking a lot like what you'd get from the stock market. Pretty cool, right? But, and you knew there was a but, this is not a passive investment. Not at all. Being a landlord means you're on the hook for everything. Tenants, toilets, taxes, you name it. It's a real job. And on top of that, your money is completely tied up. You can't just log into an app and click sell like with stocks. Selling a house is a long, expensive process. We're talking months, not days. And that brings us to our final contender, the real wild card, the one with the potential for absolutely explosive growth. Starting your own business. Whether it's a full-blown company or just a side hustle, this is the path of the entrepreneur. Now, the dream here is unlimited upside, right? But before we get carried away, we have to face a pretty cold, hard fact. The risk is off the charts. Seriously. Something like 90%, 9 out of 10 new businesses fail within their first 5 years. This is not for the faint of heart. It is a very, very high-stakes game. But if you're one of the few who actually beat those odds, well, then the sky is the limit. A successful business can generate returns that absolutely blow stocks and real estate out of the water. We're talking life-changing money. But it demands everything from you. It's an extreme, all-in commitment of your time, your energy, and very often, every penny you have. Okay, so how much cash do you actually need to get started on each of these paths? This is really interesting. You can literally start investing in an index fund with 100 euros, maybe even less. And a lot of online side hustles, you can start those for basically zero. Real estate, though, that's a different story. It's got a much, much higher barrier to entry. You're usually looking at needing a down payment of at least 50,000 euros, if not more. So, we've broken down the good, the bad, and the ugly of all three. Now for the main event. How do they look when we put them all side by side in a head-to-head showdown? Let's lay out the blueprint. And here it is, the whole story in one place. You can see the trade-offs crystal clear. Index funds, they're your low-effort, high-liquidity play. Super simple. Real estate, that's your tangible asset, your cash flow machine, but it takes work and your money's locked in. And then you've got businesses. That's the moonshot. The potential for insane growth, but it comes with huge risk and demands everything you've got. So what's the big takeaway from all this? Well, maybe the most important point is that you don't actually have to choose. This isn't some either-or decision where you pick one and you're stuck with it forever. In fact, the smartest investors almost never put all their eggs in one basket. Actually, a really solid wealth-building plan often looks a lot more like this. It's a blend. You might use index funds as the core for your long-term passive growth. Then you add in some real estate, or maybe REITs, which are basically just stocks that let you invest in big property companies for that steady income. And then maybe you sprinkle in a small, high-risk bet on a business venture for that explosive potential. It's all about building a balanced machine. And this is where the real magic happens. You can create a powerful wealth snowball where each part of your plan feeds the others. Just imagine, you take the cash flow coming in from your rental property or from that side business you started and you pump it straight into your index fund portfolio. That makes your portfolio grow even faster, which then gives you more capital to maybe buy another property. See how it works? It's a virtuous cycle. So at the end of the day, this isn't about finding the one winner. There is no single best investment. The real goal is to build your own personal wealth engine, a powerful, diversified system that works for your life. One that combines the easy, hands-off growth from stocks, the reliable income from real estate, and maybe, just maybe, that high-octane fuel from a business you believe in. So, we'll leave you with this final thought. You now have the blueprint. You understand the pieces. The only question left is, which part are you going to build first?
Thanks for watching. Subscribe for more content.